Good morning, guys. Markets are raging again, so we might as well just do this all over again, right? I love this. I love this when you see stocks. I shouldn't say that. When you see jobs numbers coming out as terrible as they can possibly be, over and over, and the stock market just keeps soaring higher and higher and higher. And when you look at it, it makes sense. It does make sense if you look at it from the standpoint of we want to keep the market going. We want to keep pumping things. We want to keep printing money. We want to keep doing everything. Because here we have at the top of the page, 320 jobs were expected to come out, 293,000 jobless claims. 320 were expected, 293 happened. No buzzing today. I fixed it, Susie. I'm a tech guru. But then you look at the unemployment that's coming out, where people are not going to work, etc. What does that mean? If people aren't going to work, more stimulus is coming. They can support the market more. The Fed has to be there to be daddy a little bit more. So the markets are happy because they're going to keep getting stimulus money. So stagflation, yep. The way the market is ignoring all these issues, isn't it incredible? It's literally incredible. If you look at every single thing around you, everything is bad except one thing, the stock market. And what compiles the stock market? Those businesses that are truly, truly struggling. And even when you start looking at what the banks are doing, I started digging into a little bit today. They're counting reserves in their earnings, or money that they had to hold. I mean, yes, it's their money, but should we really be counting reserves as what's happening for saying that like Bank of America was up 58% here? Stock market futures rise after banks' earnings top the expectation. So Bank of America soared 58% over last year to $7.7 billion, with the sum boosted by the release of $1.1 billion in credit reserves that had previously been set aside to protect against potential customer defaults. So, come on, man. I mean, come on. Hey, Seth. Come on, man. This is crazy. I mean, why are you including this stuff in there? It's just boosting these numbers. Plus they put out guidance yesterday that the forward guidance is going to be lower. So they're doing anything they can to just control the narrative. Bureau of Labor Statistics September Consumer Pricing Index, for those of you that didn't see, rose 5.4% in September. That's the inflation rate. Let's get into some other stuff. The news is rather light today. Somebody calling me? Somebody is calling me. That's weird. What do we want to do next? There was something to do. Let's do the Fed minutes. So the Fed minutes came out yesterday. Really, there was nothing to say big about them because we knew what was Powell had already laid out and said that we're not going to see any kind of tapering or trimming back of the mortgage-backed security and treasury purchases of $120 billion per month until mid-November, this coming mid-November, and it's going to stop in the middle of next year. Now, you know what's funny? I was at the dentist office yesterday, and my dentist goes, "Hey, Mo, did you know that the Fed is buying $120 billion of mortgage-backed securities and treasuries?" And I said, "Yeah, but I'm impressed that he knew because that's not his area." But it made me think, how many people out there don't know this? I would say the vast majority. I mean, he's for being a dentist, he's pretty in tune with. He reads a lot of this stuff, and even then, he didn't know it until basically mid-October, and they've been doing this for such a long time. So go start asking your friends, guys. Do some reporting for me. Go start asking your friends. Who knows that the United States market has been buying mortgage-backed securities and treasuries of $120 billion per month? Just ask your friends and see if they know. And then tell me how many you ask, and tell me how many there are that tell you yes or no. I would love to know that answer. Do some on-the-ground research for me. And while you're at it, smash the like button. The minutes suggest a slightly quicker timeline. The minutes imply that the taper could begin as early as mid-November. That's basically what he was saying last month. In our view, this is according to I don't know who said this, whatever. In our view, the bar to get moving on asset purchases tapering is very low for the Fed. I do agree. I don't think they're rushing to do anything. We already have the impression that in July, the reduction of the Treasury and mortgage-backed securities would occur at the same time. That's what they were saying back then, because they were saying, who's going to start trimming? What are we going to trim more, one or the other, or are we going to do them equally? And assuming a November to June 2022 taper timeline, this would imply a $15 billion reduction in the purchase pace per month or faster on a meeting-by-meeting adjustment schedule. Then that wants me to think, what are we going to do about the interest rates? And that comes to here. Powell has one. This is a funny story. It's just a commentary from Will Cohan. Powell has one job to do, and he's not very good at it. So we're going to talk about, to review, the Fed deliberate policy of manipulating both short and long-term interest rates to their lowest levels in 4,000 years was the brainchild of Ben Bernanke, who was chairman of the Fed during the financial crisis. And he is a quote-unquote Great Depression scholar. That's why he was supposed to be so good back then. During that time period, so then Bernanke was the one that wanted to take interest rates to zero. He called it ZIRP, zero interest rate policy. Then Janet Yellen continued it. Jerome Powell continued it. And now that Powell's in his last year, during that 12-year time period, the Fed balance sheet has exploded to nearly $8.5 trillion from $900 billion, what it was 12 years ago. These numbers don't even make sense in my head anymore. Who knows what $1 trillion looks like? And then you go and look at the federal debt, it's like $40 trillion. They could tell me it's 30 all day. Fake, lies, not true. You can't print money out of thin air for COVID, $12.3 trillion, and say that you're not adding that onto the debt and saying that that's going to be paid back. I don't know who's paying that back. That's a lot of buying. Since March of 2009, the Dow Jones Industrial Average has increased to around 35,000 from 6,500, an increase of 430%. S&P has done about 550% during that period. So my point is, this has taken 12 years to do this, and it's been a lot of low interest rates. I mean, here in 2017, 2018, if you guys remember this, I don't know, I remember this very well. Powell tried to increase interest rates. I think he increased rates 5 times in that period of 2 years. And the market at the end of 2018, from October of 18 to December of 18, threw a tizzy fit. Oh my God, it was incredible how people were freaking out about a 0.25% basis point increase that he would do every quarter. And then they just brought it all the way back down. So Powell's in for it, man. He has to decide what he's going to do. Is he going to wind this down? He has a lot of pushing and pulling. He has to be reappointed. He has a lot of things going on. If I was him, I would not want to be reappointed. Basically, he needs to decide if he's going to refill that punch bowl or if he's not. And if he's not, they better figure out a way to do it, because this whole world is just going to come crashing down. I'm going to read your comments after this one. One very sticky inflation trend leads to another. So this one is just basically talking about what's happening with inflation out there. The core, I can't believe that they do this. They strip out food and energy out of the inflation rate. So that 5.4%, even that's a joke. The bad news, of course, the inflation rate is still running well above the trend, and people are starting to factor in this quote unquote cold winter we're having. I don't really care how cold it is. If it was cold, your energy prices it doesn't matter how cold it is, you're still going to run the heat. So, Mo, how would you fix this? In my opinion, I would get rid of everything and let it all fall apart. I'm telling you, it sucks. There's no doubt about that. But here's what I would say. I would probably let it all fall apart, but then I would want to be the one to rebuild it back up, because I would not do what they're doing. I wouldn't falsely increase markets just to, it's never going to happen. This is going to go on forever, because it all comes down to people having to get reelected. That's what it comes down to. And how are you going to get reelected? You're going to make people's 401ks and IRAs and markets and this and that look really good. That's what it comes down to. So how would you fix this? I have no idea. It's never going to be fixed. So I can tell you all about how I would fix it, but it's not going to happen because it's not realistic. It's just going to keep It's just going to keep happening over and over. But I do think that what should happen is, in an ideal world, we don't go to these extremes of swinging all the way this way on the scale to exuberant highs to swinging all the way over here to depressing lows. Why don't we just keep the pendulum right here in the middle and not do all of this printing and stimulating. And then when that money runs out, you go to a depression or you go to a deep recession or something like that. Why don't we just stay in the middle ground and we have highs and we have lows, because that's what cycles are, but it's not going to be a travesty or incredibly euphoric at all times. That's just what I think. So is it going to happen? No, but I do think it would be better off in that regard. Meanwhile, there's evidence recently that, all right, this is boring me. If I'm bored, you're going to be bored. One more thing, rents are going up. Rents are going up that we're seeing. Rents have gone up almost 0.5%. It could be because of more aggressive landlord pricing, just because the eviction moratorium, they have to compensate, they have to collect. They're going to court to collect a ton of stuff. Urban markets are coming back because of the exodus that we had from the cities during COVID. Others say the housing market is up against two obstacles: low inventory and higher costs of labor materials. Building is going to be very interesting coming soon. Some economists believe the housing prices will continue to rise, but eventually will level off as more people return to pre-pandemic ways of life. Pre-pandemic ways of life means going to get a job. Workers quit their jobs at record high rate at the end of the summer. Nearly 4.3 million workers voluntarily left their jobs in August, according to the JOLTS report, equating to a quit rate of 2.9%. This gauges workers' confidence, and this is a gauge of workers' confidence, is well above the pandemic era low of 1.6% in April of 2020 and topped the previous high of April of this year. Whoops. And if you take a look at this little graph down here, you see it's no surprise. I mean, the most turnover is in accommodations and food services. It's high. It's almost 7%. Then you see the retail. That's also a normal. Education, health services, and financial. No surprise. Those are a little bit more sticky. So new hires also declined by 439,000 to 6.3 million. The number of rate and layoff and discharges were a little, I don't know. This is like beating a dead horse. I can't talk about this anymore. I am sorry. Well, not really. You're probably sick of me talking about it too. It literally is like beating a dead horse. Follow us on Instagram at TraderMo_EM, at Paul Gabriel at Seth Kirchanan. Let's get into what the yields are doing. This is a little bit more exciting. They're coming down, so it's going to be interesting to see what happens there. Of course, we had Bank of America, Wells Fargo, Citigroup report this morning. Morgan Stanley reported this morning. Everything's green. Walgreens reported this morning. Tomorrow's Goldman Sachs, Charles Schwab, and PNC. Pay attention there. What do we got next week, just out of curiosity? Okay, so Tuesday really kicks it off. Tuesday kicks off earnings week. Tesla reports on Wednesday. You can get all hyped up about that. Intel reports on Thursday. AT&T reports on Thursday. Let's hear American Express, Schlumberger. Nice. That's fun. All right. If you want to join our software, $28 a month gets you access to all of the software, including exclusive content. We're putting out a video per day to everybody. 2 videos per day to the upper tiers, actually. And it's 5 good minutes. It's either me, Seth, or Paul, or all of us together, talking about anything. I did one on fitness. Did one on some mindset stuff. I did one on gold diggers. I do it on everything. I do what comes to my head, and then I talk to the camera, and then the camera talks to you. If you want to join the Bid and Ask Nation, $78 a month gets you exclusive content, gets you access to me on a daily basis, gets you access to the group of 900 people that are in the Bid and Ask Nation, all talking about trading, etc. We're going to run through some charts for about 15 minutes here today. Ask me any stock questions you want. If you want to join Paul's Super Shorts, $500. Paul and I are doing a lot more exclusive content in there as time goes on, just because we are trying to really up that level again. We love that level. It's so much fun. $750 if you want to do a Zoom session with me. I see another one sold. That's exciting. I love doing those. So I have one the next 3 Wednesdays. I got them. So it's going to be awesome. Yeah, it's going to be great. And if you want to do a real estate deal with Paul, $10,000 for 4 hours of his time. If you're doing a deal in this market, it would behoove you to do so with a person like that. So that's that. Give me some questions, guys. Let's run through some stuff, and I will answer. How's Walgreens earnings? They beat, from what I understand. I didn't look, but they beat. You don't understand, Matt. I can't read your text sometimes. What was the last stock you bought for long term? Alibaba. And I sold a bunch of puts. Let's see here. Inflation. Just looking at your guys' comments here. Heating bills won't be the bad thing. Guys, just burn your saved cash. That's very true. If they give you free money, why not burn it? All right, let's see here. How do I feel about gold? I love gold. I have a rather significant position in gold. I signed up through EM website, the daily Discord. The daily videos, are they on Discord or where are they listed? They are pumped out on the Discord every day. You get an alert when the computer or Timo sends them out. But I love gold, by the way. SoFi, yeah, I've been hearing a lot of people talk about SoFi. Do I have any GME positions? So it's funny you asked that question. One day last year when GME was soaring, I went in there, actually live on the show, and I bought $10,000 worth of GameStop. I made 10% in about 10 minutes, and then I sold it all. Then I donated the money to charity. Because unlike the hype dorks out there that are trying to win their whole life on GameStop, I don't need it. I can give it to charity. Because that's what you should do. Christmas is all about giving. That's why we're going to sell them. That's why we're going to sell this tree to a charity. If anybody can name that, I'll do your stock next. HP, sitting at a very strong support level, which I really like to see. So this thing is just moving up. You got to get it to turn up. No doubt about that. You got to get it to turn up. Let's see what the volume is doing here. Because volume is everything in HP. Okay, so you're getting some good buying volume coming in. If I was you, just wait for this thing to get turned up and you will be perfectly fine. Next. What's it like working with Paul? He seems pretty cocky at times. I don't know. I hang out with Paul almost as much as I hang out with Nicole. So I probably maybe hang out with Paul more than, I don't know. Just normal to me. SBH, we're partners in more than everything money. We have a lot of, I think it's 3 or 4 businesses together that we're part of. Sally's Beauty. Oh, Sally's Beauty. I bought Sally's Beauty back. Was this COVID? Yeah, right in here. I think I got it for like $5 a share, $6 a share, whatever it was, and ran this thing up. Oh, Sally's Beauty. Now that's a good company. Guys, if you want to look for a good company that has a value, this is a really good company. Go take a look at them, read the 10K, do your research. Yeah, they got it going on. But if I was you, this is a dog stock. Wait for it to turn up. Down here, I would wait for just some volume. You just have declining volume. Get some inclining volume coming in there, and you'll get it that way. So, I will tell you, he is exactly the same way as he is on the video as he is in person. Christmas Vacation, Christmas Tree Miracle. No. It's from The Office, guys. It's from The Office. It's when Michael and Dwight go and get that massive Christmas tree, and then they walk in and they try to put it up in the ceiling, and it knocks out the drop ceiling. So then Kevin comes in there with like a weird little device and chops off the top of the tree, and he gives it to Michael, and he says, "What are we going to do with this little tree?" And he says, "We're going to sell this to charity because that's what you do during Christmas time." WWE. Weird stock to ask me about, but I like it. All right. Oh, wow. What do we got here? Interesting. So they got really hammered during COVID. No surprise because they couldn't put people in seats, but now it's kind of coming back. This is a great looking trend. The only thing I don't like is that volume. It's down. It has declined, and it's just extremely low. It's half of average volume pretty much every day. So be careful there. Did you say it, Susie? Did you? Oh, Susie said it. Susie's right. Susie, what stock do you want? Tell me what you want. All right, next. Christmas is canceled. INMD. What is this? InMode Limited. I assume you're asking me because they had a big day yesterday. So what I would do is I would just ignore it over here. I would look over here. What is this S? What is this? Split. Oh, they split. Okay. I would look at it over here. You're getting increased volume. Go ahead and if you get an engulfing candlestick, you can do something, but be careful. You're going to face resistance at that top side. You don't need a stock. No problem. Let's see what we got. Let's look at what, let's see what, who reported today. What banks reported today? I know it was Bank of America, Wells Fargo, WFC. Let's see what they're doing. Wait a second. I thought that, what day is today? Bank of America, Wells Fargo, Citigroup. Let's see what Citigroup is doing. Okay, there we go. Citi's getting a little bump. Okay, so I would just pay attention to this. I don't think I would... You can go long banks if you want. It's hard because banks are going to lead the market. So if you have any kind of down day, you're going to get smoked. I'm telling you that right now. And your up days, you're not going to get that much benefit from these. So that's just what I think about the banks. Okay, here we go with Target. I think it's pronounced Target, but what do I know? Nice increase, good volume coming in, running right into the 25-day moving average. Get this thing going up. If you can get enough volume, if you can get consistent volume like yesterday, you will push through this 100 and 200-day moving average. Over here on the weekly chart, I wouldn't do anything until you get the stochastic to get turned up on you. Otherwise, that's not going to really get anywhere. Simon, LPX. What do we got with LPX? Oh, Louisiana Pacific. Is this energy, oil, something like that? Insurance? I don't know. So I'm going to pull up a line chart, obviously. Yeah, and you're kind of getting so you have great volume coming in. I really like that, Simon. Really like the direction of the stochastic, like the direction of this stochastic. Only thing I don't like is this flagpole that's happening. Even here, you saw back in whenever this was, you had a flagpole run up. You did not create a W in there, and you just slowly fell right back down. So if it weren't for this little blip right here, you would have fallen through this level down here. But you had it, so it took a little bit longer. But it was still a flagpole pattern. This one, you have nothing. I could totally see this thing coming back to the 25-day moving average. So be careful with this one, Simon. Take profits if you are in this. Don't exit. Just take profits on it. And here, honestly, look at this. Yesterday, you could see that it had a hammer formation. Hammer formations coupled with a flagpole mean that the stock price is coming down. That's that. Hammers are important. Zoom. Make my heart go boom, boom. All right. Gap to fill here. Wait a second. How is this company this low if this doesn't make any sense? There has to be a glitch on this chart. How can you have a company that's this disruptive and it's half of its price so quickly? Huh. I'm confused here. I mean, these are the people that basically invented video talking, so I don't understand why it would be down here and gapping down. This is very strange to me. And why are they not hitting average volume? You would think that such a disruptive company would just be crushing it with volume on a consistent basis, but they've touched average volume two times in the past month. Sick. All right. So Zoom, you have a long way to go. I mean, even if you try to get through here to get up to the 25-day moving average, you better get some volume coming in there, I'm telling you. Otherwise, with this, I mean, I think this is gonna probably turn into a dog stock. Airbnb, you got it. I don't remember the ticker. Airbnb. ABNB. There you go. All right. Oh, you want the disruption bell? That was for Zoom. Oh, I need to write Zoom on this one because they revolutionized the world. They literally changed the frickin' world. Airbnb, they've fallen on hard times. What do we got here? So this is a 50% stock. So okay, whoever asked, Eric, 2 reasons I don't like this one from a trading aspect. I don't like it, one, because it doesn't have a year of data. So when did this thing go public? December 10th, 2020. So I would wait until December 10th, 2020 to do anything long-term with this, because you barely have a 200-day moving average. It was almost last week that thing started, or maybe the week before. But also, you're a 50%er stock. You are just stuck right here, and you have had a very difficult time pushing through this resistance point, and you're right at it again. So unless you get a ton of volume, and by a ton of volume, I don't really see any here. I need consistent volume bars up in this area, above, like up in here, for multiple days in a row. That's what's going to push you through this area, because right now you're just stuck, and it's a rough go. So be careful with Airbnb. Good question, but if I was you, swing trade it over here. Swing trade it over here. It looks like you're doing okay. But remember, this resistance point of $177, take your profits going into that, because it's going to be a tough one for you. Next, guess Microsoft Teams did the same to get market shares. Yeah, and there's this weird company out there. It's called Apple. They came out with this thing where you can do this thing called FaceTime, and you don't even have to set up a link. You just go to the person's name that you want, and then you press this like video button, and you just like video call. It's the weirdest thing. I don't know. Every time a person pops up on that video, it just kind of spooks me. Let's see what Alibaba's doing. So Alibaba, let's zoom in here. Okay. No, I want to come over here. All right. F. This is not what I wanted to see, to be honest with you. All right, so what I did not want to see is, I didn't want to see move up, pull back, and then this, because this created a W formation. So at this point, I do think that Alibaba has created a new support level. And I don't necessarily know if it's going to have the likelihood of it. I thought it was going to be a flagpole. What I thought was happening was it was going to come right up here, create a flagpole, and then fall right back down. But it has created a W formation. The good news that we have going for us, for those that want the stock to go down, is that we have declining volume, very rapidly declining volume. Also, you have the weekly stochastic going against you. William, very good. Good catch. Good catch. All right, so you can do that on Samsung phones now. Congrats. What do we got next? I saw a good question that I wanted to do. Oh, Pinterest. Let's see what Pins is doing. Pinterest has me sitting on pins and needles. So this is your quintessential dog stock, just going sideways. Eventually, this will turn up. It's just going to need some good, consistent volume coming in. You're battling 4 major moving averages here. That's the hard part. The good thing, you got a big gap going on. So with Pinterest, you just got to be patient, and you just got to follow your stochastic, and everything will be a-okay. What else do we have? What does a W formation mean? It means that you're creating a support level. So when you have a stock that just goes straight up like that, there's no support being created anywhere in here. Conversely, you would want to see this. You would want to see a stock. Let me show you. So this is when a stock just goes up every single day, never comes down, multiple days in a row. What you want to see is a stock that goes up a few days, pulls back a little bit, goes up a few days, pulls back a little bit, goes up a few days, pulls back a little bit, because what that's doing is creating these support levels. So every time that the stock price does a pullback like this, even if it start falling down here, it's more likely than not going to fall below that level, and then it'll get going. With this, you just go straight up and you can come straight down, because there's no support level being created in there. So that's why you want to see these W formations. What time is it? Market opens in about 40 seconds. All right, let's see what we got next. Oh, guys, smash that like button for me. Let's get this thing to 200 before we exit here. VLO. Let's do some oil. Hey, whoever asked me that question, I think it was HP. Let's see here. Yeah, so here's a good looking stock. This is you notice that this thing comes up, pulls back, goes up, pulls back, goes up, pulls back, goes up a little bit, pulls back, and then it's going to probably go. So this is what, when you have a W formations coupled with this great looking stock, pretty good volume coming in, not the greatest. And even today, look at that HP. Pre-market, it's going to open up right here, created another great W. So oil prices are looking really good. Yeah, this is nice. The entire market is up except for BMY. BMY can suck it. All right. Plug power. Nah. Good morning, Mo. Can I request a video on strategies on setting stop losses, pullbacks? Sure. Put it in the video suggestion channel or whatever channel you're supposed to put it in to suggest videos to me, just to make sure that I see it. Let's see here. SPY. Good question, Lee. Let's do SPY. So SPY, my goodness gracious, look at that. The stock market's open, by the way. So we're over the 100. So we were struggling. What I was hoping was going to happen is we were going to dip down here and break below the 200-day moving average. But of course that didn't happen because Daddy came to the rescue. So right now we're above the 100 and it is what it is. So, all right, guys, give me one more stock. I'll run through it and we will go from there. Why don't we do this Verizon one because everybody keeps asking about it. Verizon, oh my. So what happened in the telecom world that this happened? Because if we look at AT&T, the same thing. Wow. Guys, look at this. This is, okay, here. Let me see if I can do this. Take a look at this. Just remember what this looks like right here. All right. Now watch this. VZ. It's like I didn't even change the chart. It's like I didn't even change anything. So it must be the sector that's going on. So that makes me think that we're not in that big of, it's not that big of a deal because it's sector wide, so it's fine. I mean, it's a big deal, but it's sector wide. So let's see what happens. Right now, it's a straight up short. It's pulling back a little bit to the top side, and maybe it's creating the M formation to go down. Who knows? This is at AT&T is in an 11-year low. So if I'm you're getting some rollover here. You're getting some rollover here. Just you got to trust your stochastics here. And if I'm shorting this thing, I'm not going short on it because this is probably at a pretty, oh, wow, it's not. Okay. So when it comes to shorting one of these telecoms, don't short AT&T. If I had to choose, I would short Verizon. If you get an engulfing candlestick down that breaks the bottom of that wick, see that wick right there that happened yesterday? So if you get a price that breaks through $50.86, that's when I would go ahead and short this thing if you have a good engulfing candlestick and go from there. Maybe a video on T and Verizon might be good considering they've been smoked lately. They certainly have. So are these reverse flag pulls on T and Verizon? They very well may be, but the difference is you had the flag pull coming down this way and then you had a little bit of a rebound in price. So maybe this is creating your M formations coming down and just going to make a beautiful looking short for you. So that's another option. Make sure you look at it from that perspective too. All right, guys, I'm out of here. You guys have a great day. And since we did so much office references today, I will catch you all on the flippity flop.
Thank you.